All right, all right, all right. All right, it's a little cold up here in these parts where I'm at, so got the beanie looking like a straight up inmate right now. So I'm just gonna do a pre-market analysis for the week here, kind of look what I'm looking at for gold. So obviously, on the monthly time frame, we still got a good 8 to 9 days left. It's very, very bullish at the moment, but it's in that resistance and we still got 9 days left. Now, the last thing we saw on the monthly was that price closed past this monthly support that was maintained around 1917, but it tested this major monthly support down at an 1820-ish range, right? So overall, we can see it looked super bearish last month, but as far as how this current month is looking, it looks bullish at this current time, right? On a weekly time frame, we can see that price is very, very bullish. So I definitely expect price to continue pushing up, potentially to the 2000 range. A high, a lower low, a lower high, a lower low, a test of this high to maintain that lower high, a lower low, a lower high, a lower low, a higher high. I'm expecting a lower low to be formed to a certain extent to essentially confirm that the trend has been switched from a bearish to a bullish. So definitely still more bullish than bearish at the current moment because of the huge price action that's going on in the candlestick formation and these resistance breaking, right? We have this first resistance break right here. Technically it hasn't fully broken on the weekly because we need 2 candles to confirm it, but it's a strong enough push past it. Now, if we go down to a daily time frame, we can see everything a bit more clearer, right? We have this counter trend line coming down. Price broke past it last week, formed a support to a certain extent. On the back end, it pushed up. It broke this daily strong level of daily resistance because it was first created around August 7th. It was maintained August 30th, the 31st, September 1st, all the way to September 4th. Pushed down, tested again around September 20th, and then it finally pushed past it October 19th, right? So it was definitely a strong level that was maintained at that current point in time. And then price pushed up to this next level of daily resistance. In the daily time frame, we have this resistance, strong confluence level, right? Because it was first support, it turned resistance, tested, 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 tested. It finally pushed up to that level, and now it's technically still testing that level right now. So I'm expecting, just the way price is forming right now, at least anything can kind of change. The most ideal situation, point A to point B, would love to see price push back down to this 23.6 level, at least a 1946-ish range, because that'll be a resistance, 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 turn support to continue to push back up to that 2000 range. That's what I'm looking for. But obviously, again, just because price goes super, super bullish on the weekly, we do have a slightly level of exhaustion to a certain extent, which can also be seen on the daily. More than likely, the probability is definitely strong enough there where price could push down here. But also, I'm very much open where price may not push all the way down. Just because price is very much at the strong level of resistance right here, I'm not really looking to get in on any buys in that level because it's at resistance, a strong level of resistance. So again, the most ideal situation would obviously first and foremost, price may just come to this 23.6 level, which is a daily confluence to a certain extent on this time frame right here. So price may stop around that 1953, 54-ish range. Price may come and just stop here and then continue to push up. But again, I'm just very much open to the possibility of what could happen. Price is forming very good right now for a potential sell opportunity. If we go down to a 1 hour time frame, price was pushing up, right? Slight little higher low, but a higher high, a higher low, high, higher low, higher high, test of the low, a higher high, test of the low to a certain extent, a small little lower high, but a break of this support that was respected right here, or even if we do it right here, it's still a break of the support. We have 1 candle close pass, 2 candles confirm it. Same thing here. We have 1, 2, 3 candles break pass. So the most ideal situation would be point A to point B. If we can get a confluence in this area of support, turn resistance for the sell down, that'd be the most ideal situation. And obviously there's a support that you know is maintained to a certain extent down here. But if we go up to a higher time frame, the only support that we can really see is around that 1976, 1975 range, which is the one I have right here, the 1976, 1975. You can see it on the 2-hour, you can see it on the 4-hour, you know, even right here, 1978. So that area would be the most ideal area for price to push back up to. But again, it's one of those situations where we're just sitting on our hands. We're just going to be patient, continue to monitor, continue to see what kind of happens from here, and just, you know, just kind of go from there. What it do, man. All right, so I'm actually in a trade right now. Let's see, let's break it down. So again, just based on how the candlestick formation is closing, it's at a nice level of resistance here on the daily time frame. We got support, resistance, 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 to potentially continue turn into resistance. We got this huge exhaustion right here on the top side. Excuse me, on the H4 time frame, we had this huge push down. We had a push back up, but then it respected this H4 resistance as well, which showed to me that sellers are trying to come back into the market. We got onto a H1, we can see a little bit better. You know, we had this high here, then we had a break at this support, a lower low, and then a lower high that was being maintained right here. Support, support, break past it, turn support. Then it turned into resistance with this bullish, bearish, bearish, and then we got this exhaustion. H1 candle is about to close. I got in based on the just all this resistance and exhaustion that we're seeing within this area is the reason why I got in on this trade. But it was more importantly, the M5 closed like that. On the M5 closed like that on the lower time frame, or sorry, the M5 closed like this on the lower time frame, which is a nice bearish engulfing close to that level of resistance. And I got in personally based on this M3 candle closing, because the M5 candle had already closed like that. So I was like, okay, the M3 got another minute and a half. So if the M3 closed bearish as well, that's a good enough sign to get in. Closed bearish right here, so I got in right about there. My stop loss right now is above these exhaustion area. I think it's right at 182 flat. Yep. But yeah, that's the reason I got in the trade for a sell, just because we had a support, break past support, made a lower low, and we had a high. It was forming as a support for a certain extent, then it pushed down beneath that area, and then it formed all this exhaustion within that area. So that was just enough confluence for me to be like, okay, it makes sense to get in on the sell. But again, it's one of those situations where anything can kind of happen. So, you know, we're just going to practice and set and forget in the trade right now. Just going to continue to monitor, continue to see how it plays out. But yeah, time will tell really what happens. And, you know, we'll just go from here. It's 5:01 p.m. Monday, October 23rd. I'm still in my entry. So I got in like right about here. I'm still holding right now. The daily close bearish enough. It does have that exhaustion to the bottom. So price may try to push up here before it does anything else. But the fact that it has this bearish engulfing at this confluence, strong confluence, right? Based on the 4-hour time frame, you know, we had the high, we had the lower high compared to this little miniature little support that was maintaining. We had a lower low. We had a lower low right here compared to this miniature little support level that was maintaining. We had a lower high in comparison to this high. It's lower than that high. So H4 close. Not terrible, but it's good enough volume where, you know, and formation where it didn't make a high or low. So, you know, it just closed like that, which to me showed that but sellers are still in the market to a certain extent. We had the 2-hour candle close. Again, we had a lower high compared to this high. We had this lower low, but then we had a lower high, which showed that sellers are still in the market to a certain extent. Then we had this bullish push up, and then we had this bearish candle close past it, again to signify sellers are still in the market to a certain extent. Then on the 1-hour time frame, we had this counter trend line still being maintained for the certain period here on the 1-hour time frame. We had a 1-hour resistance being maintained, 1-hour closed bearish past this support level in this 1 hour. So now it's just a matter of being patient, letting the market play out. But yeah, that's the analysis, and we'll go from there. So we're back again to continue to monitor and break down this trade. So as we can see here, I'm still in this trade at the moment here. So again, the first entry I got in was pretty much yesterday. around, excuse me, like it was around like 2 p.m. Eastern time, just because this level of support, turn resistance was being maintained. I got in here, price pulled back. It was pushing up early on the 1 hour, and it got close to this 1 hour zone. I didn't close out because I was like, okay, price definitely has to break past this area. Gave me a nice little exhaustion in that area. Then on a 15-minute time frame, price pushed down, closed with this nice bearish close, strong bearish candle past the support area. I got in on a 0.5 lot here. Stop loss is still the same, so stop loss is at 1983. But yeah, that's what I saw. That's why I got in, and now it's just a matter of holding and just being patient, let the move play out. But yeah, we'll let the trade continue to play out, and we'll go from here. So it's 1:15 a.m. Eastern Standard Time.
I'm not tired. I'm not tired at all.
And I'm officially scaled into a 2 lot. So I just got another entry after this 15-minute candle close right here. Excuse me, and it's based on a couple of things that happened on the higher time frames, right? Again, it all starts from the daily, closing with an engulfing right there. I was expecting to push up, which it did. H4 had this huge exhaustion within this daily confluence zone. H2 closed to respect this resistance level. Bullish bearish test, bullish bearish test again. Then we have an H1 time frame, respecting this area, got all this exhaustion within this area, and then followed by the M15 bearish engulfing to close beneath the support area. So as we can see, I am scaled in, got a standard at 1976, got a 0.5 at 1975.78, got another 0.5 at 1975.49. Man, I'm confident in the setup so far, so we're just gonna have to hold, see how everything kind of plays out from here, and it's just a matter of letting everything play out and go from there, to be honest. So I'm about to go to sleep, and once I wake up, it's either that I would have gotten stopped out, or price will continue moving down, or it'll be consolidating. But I'm open to the possibility of how much I'll lose on this trade, and just gonna go from there, to be honest. Tuesday morning is 6:58 a.m. I did just close the trade I was in. As we can see, price dropped from where it was at last night. My overall TP was at 1945. The first area I was gonna probably take profit was around 1956. But you know what? I was like, you know what? This is a 4% gain on the account. I just closed out. These were the entries, 1, 2, and I get another scaled in like right here. This was the first entry. This was the second scaled in. This was the third scaled in. As we can see, I closed out down here. So I'm currently up 4% on the FTMO account. This is the balance of the account that we just closed out all those trades. These were the trades that was taken. And if we go to the actual FTMO webpage, as we can see, active started on the 19th, the next withdrawal date. And then if we scroll down just to make sure everything matches up, profit matches up right there. And the trades taken matches up as well. And that, my friend, is how you do it. Now, that is why you just always got to stick to your plan, you know, because the first actual trading day, I did place a couple 0.01s on Fridays just to start the official trading day, you know what I mean? But the actual first trading setup where I actually traded with a normal lot size and actually traded was yesterday. And I took like a $300 loss, which is 0.6%. But as you can see, the next trade setup, because all those trades, all those 3 trades were in one setup, one night, just scaled in entries. The second trade setup, you know, made 5%. So you just got to stick to your plan, man. Don't overcomplicate it. Less is indeed more. That's something I had to learn myself. I was just looking for trades every single day. Just get in. Okay, it's my trading time, trading session. I got to look for a trade. But, you know, less is indeed more. Just focus on, you know, trading less, making more, get your money, get out, reinvest it, and just continue building, man. But yeah, thank you for tuning into the video. I'm gonna keep this channel going as far as just just posting the growth of the channel, and just posting the the withdrawals, the challenges. Just keep it going, man. So thanks again for tuning in, and I'll see y'all on the next video.